So today's class continuation ratio analysis. Ratio analysis is important topic in the examination point of view. You will be get in all competitive exams, MCOM or NET or SLET or accounts officer. So we will be get 3-4 marks in this unit. So I am continuing the same bit bank. 16th question. Liquid assets includes option A cash, B is debitors, C is marketable securities. So means the short term duration we will be required the money, so that is all are included. Cash is we already cash, B is debtors, the debtors will be requiring the 3 months or 6 months, so we can get the money. Marketable securities means in this time we can sell, or 3 months after we can sell, or 6 months after we can sell, so we will get the money in short duration period. So all are included in the liquid assets. Answer is D option. 17th question. Super quick ratio includes. Super quick means on the spot money. So answer is A is cash and bank balance, B is ready saleable securities, C is book debits and bills receivables. Answer is D. Answer is A and B. Cash and bank balance, readable saleable securities. So this concerned the cash requirements easily to get in short duration time. Next to 18th question. From the following items which is not taken into account in computing the current ratio. So not considered in the current ratio. So when we are solving the multiple choice question must be read in 3-4 times. So question is asking are directing or indirect. In these questions they are asking indirect. The question is one more time I am repeating this question. From the following items which is not taken into account in the current ratio. So not taken is not, indirectly they are asking the question. So you should observe when following the answers. So A is answer sundry debtors, B is bank overdraft, C is cash in hand, D is goodwill. So all are included in the current ratio. Exemption of goodwill. Answer is D is goodwill. Goodwill we should not take in the calculation of current ratio. Next, 19th question. This is also indirect question. So you should observe. Multiple choice practice is mainly we can focus the question types and also content. Content is secondary. First thing is question models is very important to learn in the solving the multiple choice questions. That is the key success of in NET or competitive exams. So I am giving the suggestions. You must need to practice more and more questions. So when we are attending the before exam. So 19th question. Identify the item is not taken into account while computing the quick ratio. A is cash in hand, B is bank balance, C is sundry debtors, D is stock. So answer is D, stock. We should not take in the calculation of quick ratio. Quick ratio all are included in the, this is the main important point, that is the current ratio and quick ratio same, but we are not considering number 1 point stock, second is BOD. In the asset side is stock and prepaid expenses, secondary is liability side BOD. So this is the main difference between the when we are calculating the quick ratio and current ratio. Next to 20th question. If the current ratio stands at 3:1 and equal to increase in the current assets and current liabilities. So A is increase, B is decrease, C is not change, D is none of the above. Answer is 3:1 increases in the current assets, increase in the liabilities would be the ratio. Means ikkada first this is 3:1 means 3 indicates the assets, 1 indicates the liabilities. So in this increase in the current assets and current liabilities would be the ratio. So both are increasing, but it is 3:1. So it is increasing portions, means current assets are very high. So 3 means indicates assets, 1 indicates liabilities. So the position is concerned is increases. Answer is A. Which is the immediate solvency ratio among the following? That is, answer is immediately showing the ratio is answer A. Choice is given. A is quick ratio, B is current ratio, C is stock turnover ratio, D is debtors turnover ratio. Answer is A. Quick ratio will be immediately solving the ratio. Market 22 question. Market transaction that has effect on the current ratio. So market transaction has change transaction that has effect on the current ratio means option A, goods sale on credit, B is option goods on sold on cash, C is bills receivable collected, D is debtors increases. Answer is debtor increases. Marketable effect on the current ratio. This is all the long term items means goods sold on credit. Credit means not the in short current cash sales is not required. So that is amount will be receiving on 3 months or 6 months or 1 year or 2 years. So it is requirement of debt. Next, goods on sold on the cash. Sold on cash means market transactions. Sold on the cash there is no effect. Bills receivable means bills are collected, so there is no effect on the current ratio. Debtors increases means so already given debtors, so already increases. It's not effect on the transaction. This is the long term, so we should not take in the current ratio. So that is debtors increases. Okay, answer is D. Next, 23. Change the current ratio will be caused by. Change the current ratio will be caused by. And it is directly question is given, so we should observe the multiple choices. We can choose the best option. First need to study the cost and management book, then after solve the bits. Otherwise we cannot solve easily. So option A is plant and machinery account, B is machinery budget, C is preference share redeemed, D all of the above. Change in the current ratio will be caused by. Current ratio effect on plant and machinery preference dividends is actual answer is not given, none on ivali. So but in this is not given, answer is D is none. So answer is none, not the all the above. So next to 24 question. The current ratio may be increased by A, option A, understating current assets, B is overstating current assets, C is overstating current liabilities, D none of the above. Preference share redeemed means there is no none of the above, because shares are issued, redeemed means reissued, so there is no effect. Current ratio may be increased means current ratio, understanding of current assets, the answer is. Next, 25th collection of the cash from the debtors will cause the current ratio. Says answer is no change. Collect of the debtors cause the current ratio. There is no change. Answer is C. Next to 26th. Sale of inventory on the account credit will be focus on the quick ratio. It is increases. Weaken solvency of a current credit increases. And means sale of inventory. We are getting the net cash. So that is automatically increase the current ratio. Next to 27th question. The sale of inventory for cash will be cause the current ratio to. So remain unchanged. Sale of inventory for cash will be caused the current ratio is remain unchanged. There is no change. Okay. Next to 28th. Purchase of inventory on credit will cause the quick ratio. B's answer is decreases. Purchase of inventory means that is decreases. Quick ratio will be decreases. Inventory on credit is decreases, and they are taking in the debt, so that is ratio will be effect on the cash flow, so that is decreases. Answer is 29th question. Which of the following items is not taken into account while computing the current ratio? D's answer is option C is given. A is sundry debtors, B is bank overdraft, C is sundry creditors, D is furniture. D answer is correct. So means current ratio is, this question is given indirectly, so it should not taken into account. Not taken into accounting announcing, so that is indirect question. So we can identify. So concerned the current ratio is sundry debtors and bank overdraft and sundry creditors. Exemption of furniture. Furniture is a fixed, not related to the current ratio, so we should not take the, should take the answer is D, furniture. Next, 30th question. Writing of debit account as a bad debit will cause the quick ratio to. Writing of debit account as a debit, bad debit will cause the quick ratio is. So means B answer is decreases. Writing of bad debits means their quick ratio effect on them, so the amount will not receive in the long period, so that is we should not take in the quick ratio, the amount will be decreases. Next, 31 current liabilities, bank overdraft, and see that is concerned the current assets. Next, 32 question, the ratio between 32 question, the relationship between the gross profit and sales. So be both and then gross profit ratio and gross margin ratio. 34 question, the ratio between the total operating expenses and sales. B is operating ratio. Between the means this is the operating ratio is equal to the total operating expenses divided by sales into 100. So the question is given directly. Next, 35 question, the ratio, which the ratio is concerned a good index of the operational efficiency of the concern. Operating ratio, which ratio is concerned a good index of operational efficiency of concern is operating ratio, means efficiency of the company, so we should analyze in the calculation of operation ratio. Next, 36 question, which of the following is not an operating expenses? D answer, interest. We should not take in the operating expenses. It is inflow of in every month interest will be received, so that we should not take in operating expenses. We will pay in every month in expense, so interest is every month. So this is class over. Please subscribe my channel.